All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Welcome. If you're new, let me quickly explain to you how this works. So first, I'm going to run through the economic calendar, something that you should be in a habit of doing at the beginning of each week. We want to see what events may be coming out that are important so that can help mitigate risk. Second, we're going to go over the topic of today's stream, which is continuation patterns versus reversal patterns. And there's a very important lesson here, especially with this Bitcoin chart. And I want to teach you some important points so that you can be better prepared for these type of situations when they change. And then we're going to go over the Trade Scanner Pro script, which you can run on your charts. I'll talk more about that when we get to it, but we can see if there are any signals on the smaller time frames, and we can apply what we learned from the stream and see if it makes sense. Okay, so with that being said, let's get started. Let me pull my slide up here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, if you guys can't hear me, let me know. Let me just say hello to my regulars. We got Stian, good to see you. Stian is the guy that made the Trade Scanner Pro and the Trade Scanner bot available. So always thanks, Stian. Every day you guys come in here. Savi from Brooklyn, how you doing? All right, we got Savi. We got Arm, how are you? I know he's from South Africa, I believe, because I have a good memory. And Lad, good to see you. All right, so it's probably going to be a slow day today. I don't know what's going on. Maybe the back to school, everyone goes back to school. Even traders go back to school. I don't know, but it seems to be slow. But okay, cool. Now, before we get into the economic calendar, I just want to mention a couple of things. First, make sure you check the links in the description. Okay, there are some important links there. If you want to try the Trade Scanner Pro out for free for 14 days, there's a link there. If you want to join our Discord community, there's a link for that as well. There's a free channel that Stian is available, and also Alex. They answer a lot of questions, and they help a lot of people out, especially if you need help with the Trade Scanner Pro. That sort of thing. There's Alex. How you doing, Alex? From Romania. Okay, so they do a very good job at moderating that and keeping that going. Also, if you'd like to try out the Trade Scanner bot, you can try it for free by getting one free trade per day. There's a link for that in the description as well. Okay, Steve made some important upgrades to the bot, and he's actually still working on a few things. And the bot actually sends out a trade per day. Now, if it has trades open in all of the asset classes that it trades, then it won't call new trades until a trade is closed. Okay, just wanted to mention that. Stian explained that to me earlier. So just something to keep in mind. But each day, the bot will send out an email, and it'll send you a trade idea based on how the Trade Scanner Pro works. So it sends out, the entry, the stop, the take profit, and all that stuff. So you can kind of track that. We're also working on a better track record page. So you'll actually see an equity curve, and you'll actually see the results of these type of trades over time. Okay, but that's in the works right now. Just wanted to mention that. Now, if you're interested in something like TradingView, there's a link in the description there for that as well. That's an affiliate link. That's Stian's affiliate link. So if you sign up for TradingView, he gets a cut of your payment. But here's the thing. There are some benefits to having TradingView. You don't need it to use the Trade Scanner Pro, but there are some benefits, like you could set more than one notification. You can do things on multiple time frames, and there's a bunch of benefits to it. We won't have to talk about that now, but the important point is it's not a requirement to use the Trade Scanner Pro. Also, if you're interested in using Bybit or MEXC and you're a non-US resident and you want to try out another exchange, we have affiliate links for that as well. Anything that if you open an account and you place trades, Stian gets a cut of your commission. And then that goes a long way into helping him support the community. He does a lot of work behind the scenes that may be hard for you to appreciate because you don't see what he does. But any kind of support is much appreciated, and it helps him get things moving faster, okay, because resources are limited. Also, if you just want to send him a tip outright, just because you may not be interested in these products, there are two wallet addresses there. One is for a Polygon, the other one is for Ethereum. So if you're feeling generous, don't be shy. Okay, just wanted to mention those things. Also, make sure to like and subscribe to the channel if you like this content, so that it helps me build the channel more and we can have more stuff here as well. All right, enough of that. Let's now talk about the economic calendar. If you have any questions along the way, feel free to ask. Don't be shy. Keep in mind, these streams are meant to be like a free training session for the Trade Scanner Pro. So I stream every Monday and we're going to go over trades. If you look at my previous couple of weeks, there have been some interesting trade setups there that we've taken, and you can see how this thing works. My goal is to teach you how to use the Trade Scanner Pro effectively so that you can see a positive result, or at least increase your chances of seeing a positive result. I see people, they sign up and then they cancel like after a day or two. And that just tells me one thing. They have the wrong idea, okay? The Trade Scanner Pro is not a forecasting tool and there's no magic behind it. Right? It's not going to help you grow your hair back or get better at dating women. It's not going to help you with those things. So you have to understand, it has to be used properly. It's a confirmation tool, which means you have to do a little bit of forecasting yourself and you have to arrive at an idea. And then you use the Trade Scanner Pro to confirm your idea. If you want a step-by-step process on how to utilize it, if you go to the YouTube channel, my YouTube channel, on July 3rd, there's a training session. There was a student meeting that I conducted, and it's called 5 Steps to Better Signals, something like that it's called. And it shows you 5 steps you could use. I'm not going to go over all that here, but just wanted to mention that. All right. So the Trade Scanner Pro is a confirmation tool. We will get into that momentarily. So now let's transition here into the economic calendar, shall we? So this week, some weeks I like to test you, other weeks I'll just tell you, right? So this week I'm just going to tell you. We have tomorrow, which is Tuesday, we have retail sales here in the US. Retail sales, I believe, comes out at 10 a.m. or 10:30. Double check the time, okay? Because I'm not exactly sure of the time. Sometimes these numbers come out at 8:30. But retail sales can move markets, especially if there are surprises. All right, it's not the biggest number in the world, but it can move the market. So please keep that in mind. This is especially important for day traders. Okay, so retail sales. On Wednesday, we have the FOMC meeting rate announcement. Now, the Fed is expected to cut 25 basis points because he's mentioned it 10 million times. Okay, so the Fed is expected to cut, and then they're going to also share their projections for the first year and second year where they think interest rates should be. And they're projecting lower rates. This is very important because lower rates is typically a bullish thing. Now, I'm not an economist, and I'm not going to sit here and try to figure out how this is going to work, but here's the part that I don't understand. And maybe some of you out there have a better grasp of this. Although I don't use this when I make decisions, especially for day trades, because it's irrelevant, but something to keep in mind. We have an inflationary problem in this country. It's pretty clear. It's been clear for quite some time. The source of the inflation seems to be the expenditures of the current administration. They like to spend money like it's water, okay? And because of that, we've seen what looks to be like inflation, right? Inflation that we haven't seen in many, many years. I go to the supermarket, I see it. Now, the Fed is now cutting rates. Usually the Fed raises rates when there's inflation. So now we're having a rate cutting environment, right? A lower rate environment coming, and they're planning on cutting it lower and lower. And we have this government situation. I don't know, but the two combined doesn't sound like a healthy thing for inflation. All right, now maybe I'm wrong. Maybe we get a new administration in November, and if we do, they're going to change the government part of the inflation. They're going to change that if we get a new administration. If we don't, all I could say is maybe you should buy gold or silver or something, Bitcoin, because we're going to have an inflationary problem. All right, with the Fed cutting rates. I just don't understand why they're cutting rates. Maybe it's political pressure. I don't know. Anyway, I just wanted to throw that out there. Something for you to think about. And again, I don't use that to guide my decisions on the short term. Now, when it comes to investing, then that could be important information, because if we're facing a lower rate environment, typically that's bullish, typically. So that could be good for what? The small caps that have gotten beaten up. maybe altcoins, but it's not going to be the old names. It's probably going to be new names, all right? That whole thing. Alex has a whole channel in the server about those. So if you're interested in that, you could check that out. Also, in my previous stream, I talked about a dollar cost averaging strategy, right? I'm not going to go over all that here, but you can check that out as well. Now, yeah, so something to keep in mind, lower rates are typically good for speculative stocks or small caps or startups and all that stuff because they can borrow money cheaper and they could put money to work, and that's how it all starts, right? So something to keep in mind. Now, so that's the FOMC on Wednesday, and that usually comes out at 2 p.m. Eastern time, followed by the press conference, I guess, where he's going to talk about his projections. So something to keep in mind. Right now, the cut is priced in, so it's not like he's going to say, "Oh, cut 25 basis points," and the market should rally. It's priced in. The market expects this, so the market may not react dramatically to that in itself. But if there's some sort of surprise somewhere in the press conference or something like that, you may see a range expansion one way or the other. Don't pretend to think you know the future. The market must process that information. The market decides. Don't get in its way. That's all I can say. All right, now that's Wednesday. On Thursday, we have the Bank of England with their rate announcement. And I believe it's on a Friday, the Bank of Japan has their rate announcement. Now, there was a few other economic numbers in there from like Bank of Australia, and I saw Bank of Canada, but they're not as important. They're, especially with all these rate announcements, they're going to take priority, the rate announcements, all right, especially the FOMC. Now, the other central banks, they usually don't lead, right? The U.S. government, the Fed usually leads because we're the world reserve currency. So usually what we decide, everyone else copies. Typically, it's what I found. Who knows if that happens? I don't know if that actually is going to occur. So you can't hold me to that, but just something to keep in mind. Those rate announcements will be important. If you're in those Forex pairs, it can affect that Forex pair somewhat. So be aware of that. All right. So that's pretty much what we have an economic calendar. So it's a pretty heavy week, certainly a heavy week in terms of economic news, and things can change dramatically. So this means if you have positions going into one of these events and you have profit, perhaps you want to shave some profit off. Perhaps you don't want to take any aggressive positions going into the event. The best thing to do, especially as a day trader, is wait for the event to come out, let the market process it, and then look for opportunities after, because then the market knows what it wants to do, and we have to follow the market. We don't assert ourselves on the market. Please keep that in mind. All right, so that's the economic calendar. If you guys have any questions, let me know. Alex says here, just had a massive move recently. Oh, Jivo, okay. Yeah, so again, these stocks are going to start perking up. Watch the altcoins, right? They may not start perking up now, but as speculative money starts to build, right, where do you think it's going to go? That's what you have when you have low rates. So, and rates are expected to go lower. And we have a government that still spends like, they can print money forever. And that may change. So again, these are things to keep in mind. I don't want to plant opinions in your mind, but just these are things to keep in mind. All right. More important if you're an investor than if you're a trader. All right. Anyway, let's move on now and let's talk about the Bitcoin chart, shall we? I'm going to make this chart bigger so you don't have to see my big head. All right. Now, this is a chart that I shared on my TradingView article that I published yesterday. I hope you had a chance to read the article. And here's the point that I want to make today about this. I pointed out a few things. You can see this arrow that I put right here, right? That arrow right there points to the bullish pin bar that you see on the chart. That bullish pin bar is important. You know why? Because it defines a bullish structure. It's a higher low. So if you have a higher low, never mind that it's a pin bar. Even if that wasn't a pin bar, if that was maybe something else, maybe like an inside bar or something like that, and it's a higher low, if you take out the high, the price is likely to go higher. How much higher? There's no way to know. But the whole point is something like this is a continuation pattern. So again, today, the title of today's stream is Continuation Patterns versus Reversals. Now, who can tell me? I'm going to ask you guys a question. What type of candlestick pattern is typically a continuation pattern? And Stian, you can answer this too if you want. Sometimes I tell Stian he can't answer because he knows all the answers. Sometimes I say give other people a chance, but that might be a tricky question. So Stian can answer it. Hey, Aspirinus, how are you? Okay, so who can answer that question? What candlestick pattern is typically a continuation pattern? Anyone want to answer that? You can also say, I don't know. That's an acceptable answer. That's what we're here for, right? I'm here to inform you on these things so that you're better prepared. Alex says consolidation. Okay, but what kind of candle represents that? You're correct. Consolidation is correct. But Armin says hammer. No. A hammer is equivalent to a pin bar, right? That's what a hammer typically is, a pin bar. That's not the one I'm looking for. Confirmation after the bullish pin bar. No. What candlestick pattern is typically, I mean, a pin bar can be, but a pin bar is not, a pin bar can also be a reversal, right? The pin bar is not typically the continuation pattern, although it can be. Outside bar. No. Alex says doji. You're close, Alex. What else can be a doji? What's my favorite kind of candle? I talk about it all the time. Stian says higher high, higher low. No. Yeah, how could you guys miss this one? There's one type of candle. It's usually usually a 2-candle pattern. I'll give you that hint. Nope, it's not a hammer. Hammers are also pin bars, right? A hammer is a single pattern. It's a 1-candle pattern. There's a 2-candle pattern that I typically refer to. I refer to it a lot, and it's often associated with continuation moves. Which one is it? No one's mentioned it yet, but no, not the pin bar. No, come on, you guys and girls. Alex almost had it. Alex said doji. That's very close. Who said it? Alex. Mother bar and inside bar. You got it. The inside bar. That's the answer. Now, an inside bar can also be a reversal, but it's typically a continuation pattern. Typically. Just like a pin bar is typically a reversal pattern, right? And that's basically the title of today's stream, continuation versus reversal. This is very important. And see, I could see a lot of people couldn't, maybe I could have asked the question better. I don't know, but I wasn't getting the answer. And then, you guys eventually got it. So one of the problems in this game is bad information. That's why less is more in this game. The less, if you could make judgments on the least amount of information possible, you will be better off. Especially as day traders, we need to be minimalists, right? And the reason for that, again, is because most of the information we consume is useless information. So more of it is not better. Now, that's why I like to categorize trade ideas basically into 2 types, reversals or continuation patterns. So when you know what one should look like, now you can be more prepared for what the market throws at you. Now think about this, because again, everyone gets obsessed with forecasting, right? Everyone gets obsessed with, oh, I don't know the future. And then the fake gurus tell you they know the future, and you start to believe that you could tell the future. You can't. Here's how it works. The market, you have to think of yourself as like a baseball player, right? I'm not a baseball player, but maybe some of you can find this idea, this analogy useful. Think of yourself as a baseball player, right? And you're up at bat, and the market is the pitcher on the opposite team. And the market is going to throw a ball at you. And a good baseball player knows how to read that ball or knows how to read the pitcher so he can connect with the ball, right? You have to think of it the same way. The market is going to throw a ball, and the market doesn't tell you what it's going to throw at you. So you have to recognize that ball so that you can connect with it. And if you strike out, well, that's what you have a stop for. If you don't have a stop, then you're really in trouble, right? But you understand that idea? So the market throws a ball at you. And you have to recognize what that ball is because it can change, right? This is why you can't be married to any ideas, especially as a day trader. Now, let me get into the next step here. I'm looking at a daily chart. And on a daily chart, things move very slowly pretty much. It takes a long time for these candles to close. It's an entire day, which means you have a lot of time to make a decision. You can wait the entire day and then decide, oh, I have an inside bar. Oh, I have a pin bar, right? And you can wait the whole day for that. But when you're on smaller time frames, like 1 minute, 3 minute, 5 minute, things change fast and you have to make decisions a lot more quickly. So it's a lot harder, especially since you really can't get married to any ideas as a day trader. Now, I'm bringing all of this up because on this chart here, we have this candle right here. See this candle that I'm pointing to? That candle is basically an inside bar. Now, for people that get obsessed with precision, if this candle is a couple of points higher than this candle, it's still an inside bar, even though it may not fit the exact definition. The exact definition is the mother bar, the larger candle, should be higher, right? The high should be higher than the high of the inside bar, and the low should be lower than the inside bar, right? That's pretty much the exact definition. What is the high here? 60,660 on the inside bar. What's the high on the mother bar? 60,670. So it happens to be inside by 10 points. But what if this inside bar high was 60,680? It'd be slightly above by 10 points. Can we consider that an inside bar? I would, because 10 points is nothing on this time frame. Okay, if we were on a 5-second chart, then maybe another story. But this is a daily chart. 10 points is minuscule. It's meaningless. Now, if this inside bar had a long range, like a pin bar high, and it was like a few hundred points higher than the mother bar, okay, then it's not an inside bar. But it's got to be very clear, not a couple of points. Does that make sense? So that's the first thing. The market is messy. So don't get obsessed with precision. Some people, when they see the pin bar, they're like, well, it's not exactly a pin bar because, the high to the low is not 1/3. But if there's a long tail on it, it's a pin bar, right? So like when you look at some of these candles here, like these are pin bars right here. Right? These are pin bars. The definition of a pin bar is the open to the close is supposed to be less than 1/3 of the entire range of the candle. That's the official definition. But I mean, look at this candle here, right? I mean, you can argue that this is a doji, but this can also be argued that this is a pin bar. Look at this one. You can argue that this is sort of a pin bar, not exactly, but it's got a pin on it. The open to the close is larger. My point is, don't get obsessed with those precise rules, okay? Make sure you're seeing the bigger picture. Now, back to this candle, right, which again is the point of today's stream. The reversal versus a continuation. Now, I just finished telling you before that a inside bar, which is a 2-candle pattern, is typically associated with continuation, right? Now, we're not going to talk about other time frames yet. We're just going to talk about this time frame. What happened here? What happened? So here's the question I should ask you guys. Let's erase a couple of these candles here. All right, so let's say this is all we had. This is what we had pretty much yesterday, right? There was one more candle here, but at this time, you have an inside bar situation. No buy action. It met supply. Okay. But now look at this. Would it be reasonable to expect a continuation higher from that point? What should I expect? How do I come up with a trade idea here when it looks like that? As you can see, I drew this illustration here. I was anticipating the pullback followed by a reversal back to a higher high. That was my anticipated scenario, okay, that I published yesterday. But I want to basically teach you how I arrived at this. But before we can do that, is it reasonable? Alex says, yes, it's reasonable. Is it reasonable? So how do I determine then what will tell me that this is, what will confirm for me that this is a continuation pattern? But the low was taken out and it was in the resistance there. So Alex, you bring up something very interesting because I was going to get to that. So my question then here is, what would have to happen to confirm this is a continuation pattern? What would have to happen? Because as you're watching this, you should be telling this to yourself. What needs to happen for this bullish momentum to continue? What needs to happen? Alex, you want to answer that question? The next candle will take the high of the previous candle. Yes. So you're watching the high of the previous candle because the inside bar is in place. If the next candle takes out the high, okay, the inside bar high, that is your continuation pattern. That's continuation, momentum continuation. This structure is bullish. You have a higher low, and then that would be the higher high on its way to the next resistance at 64K. Does it get up there? I don't know. That's up to the market. Remember, the market throws the ball at you. We don't know what happens. Once we get the confirmation, all we can do is define the risk and say, okay, let's see how far it wants to go. It's not up to you. Doesn't matter how good of a guesser you are. It's up to the market. The market decides if it's going to go there or not. So all these frauds that tell you, I called it a 64K, it's going to 70K. They're just fooling you. All of you who watch me know that now. All right, so I don't have to go on that rant. But if someone you're new, you may still be stuck on one of these clowns that's teaching you this nonsense, and you think, oh yeah, I think it's going to 70K. It might, but there's no way to know. So don't stop fooling yourself, is what my point is, right? So this is what tells you that this is a continuation pattern. But instead, the market gave us another look. Alex mentions it here. Okay, well, look what Alex mentions it. He says here, that was so Alex, this is in his original message here. He says, the low was taken out instead. Oh, so that's a new piece of information, isn't it? Right? Not only was the low taken out, but where was this low taken out? Alex mentioned it was a resistance level. Have we not talked about 60K as a resistance level? I wrote about it in the article. Let's just draw a line here at 60K. Okay, this is 60K right here. I'm going to draw a line through it. Okay, now look how many times 60K was touched just in recent months, right? As a support, okay, and then it broke, okay, it became a resistance, right? Look, resistance here. Look, support briefly, support, or it's kind of mixed over here, right? That's a pain. Resistance here, broke above, broke back below, resistance again, right? So since we're testing 60K from a low, it's a resistance. And that's something you have to keep in mind. That's part of knowing context. So we reached 60K, right? Everyone's excited. Everyone thinks it's going to 100K again. All the fake gurus come out with their thumbnails, 100K, blah, 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 right? And then we get an inside bar. And at that point, you're like, okay, do we continue through or do we break lower? Since you're at a resistance, there's a chance that you break the low part of the inside bar, which then it becomes a what? If the inside bar low is taken out, as Alex mentions here, what does that mean? What does it mean? So does the inside, at that point, would you classify the inside bar at that point, if the low is taken out, do you classify it as a continuation pattern or do you classify it as a reversal? Remember, an inside bar can be both. Reversal, yes, because it simply took out the low of the candle, right? That's how you know. And when you see that, let's say you were interested in a long. You're like, I think it's a long, blah, blah, blah. Because it could have been a long if it took out that high. But the market chose otherwise. So it takes out the low. That tells you one thing. No matter whether you're a day trader or a swing trader, that tells you, let me hold off on longs, because this is not what it should be doing if the momentum was going to continue. It should not take out the low of an inside bar, especially if it's a daily candle, inside bar low. You understand? So that changes your expectations. You adjust. So again, the market throws the ball at you and you say, okay, it broke the low. Cool. Now I at least know to stay out of its way, right? And then here we are now. So that information can be extremely helpful, because now when you see this and it takes out the low, you're like, inside bar low taken out, bearish signal on the daily time frame. That you can justify a swing trade there if you'd like. Of course, you'd have to measure your risk based on the inside bar high, which is what, 60,660, and the low was what, 59,430. That's about like 1,200 points. Is that like 1,200 points of risk in this candle? What is that? Yeah, basically 1,200 points. Not bad for a daily candle. Usually, daily candles can be 5,000 points of risk. So that's actually pretty good, right, as far as risk goes. And if you risk 1,200 points, you should be at least looking for at least 1,200 points. Have we moved 1,200 points lower since that entry? Let's see. Have we? Yeah, we've moved 2,000 points lower. The lowest point of today was 2,000 points lower than that entry if you had taken something like that. Now, again, you could have been prepared for something like that if you understood, number one, we were at a resistance. Number two, we got an inside bar, which should be a momentum continuation, but it turned the other way. Inside bars can be reversals, especially if it's associated with a resistance level or a support level. This is a clear-cut resistance level, 60K. That was not a secret, okay? After 60K, you're looking at basically 64K. So that was a trade. And you say, well, is that, what's the trend? Well, never mind the trend. If you're a swing trader, really, there's no trend here. This thing's consolidating. It's been consolidating since March. You're at a resistance. And as I've told people many times, you're looking for levels, support and resistance levels, until there's a clear-cut change, right? We don't have a change yet. All we have is, yeah, you can argue low or high, but this is not a trend, right? Not on this time frame. This is a consolidation. So you could play the levels around this consolidation. The next support on this thing is going to be around here, right? Was it the 56K? If that's cleared, you're looking at the 53K area, 56K to 53K area, possibly 50K, if it continues. But here's the thing. This movement right here, this bullish movement is still in play. All right. So this would be an aggressive short because this movement hasn't taken out the pin bar low. Okay. That higher low. You can sort of give this a mini wave count if you want, right? You could say this is 1, 2, right? 3. Is that the shortest wave? 3 can't be the shortest wave. 4 can't overlap wave 1. Well, it's kind of messy. I don't know if the wave count will work there. But basically, if it can hold this area, the 56K area, right? If it can hold the area, you may get another leg higher. That is how I came up with this illustration. So at this point, knowing all of that, what should you be looking for right now? If you're not in this short, like if you're in this short, great. You just let it ride until you get a conflict, to get a conflicting signal on this time frame, right? Some sort of bullish reversal off of one of these support levels. You may not get one. This thing may, for whatever reason, have strong bearish momentum and give you a candle that looks like that. It's possible. But again, we don't know, right? The market has to throw the ball. And then we can only decide after we see the close on this time frame. So as a swing trader, that's one possibility you can be looking for. And of course, what opens the door to that possibility? Taking out this low, today's low, taking this out tomorrow would tell you that momentum is likely to continue. But how far can it go? That's up to the market, right? Don't try to figure that out. Just let the market tell you. If a reversal shows up, you should be adjusting. If you're short on this time frame, now I'm specifically mentioning this time frame because if we're operating on another time frame, the outlook is not going to be the same. Okay, your expectations are not going to see them. Hey, Peter. Okay, so now, what are you looking for if you get the reversal in this area? What are you looking for? Right? Let's say it goes to 56.5 or 57 even, and then you get like a pin bar to go along, or you get an inside bar, and it's a bearish, it's like a red inside bar, kind of like the one up here. But instead of the bottom of the bar, it takes out the top of the bar, and it happens to do it in this area right here. What are you thinking? Anyone want to answer that question? Again, this is very valuable training. Okay, I shouldn't be doing this for free, but this is important because this is all going to tie into how you use the Trade Scanner Pro. I'm showing you this on the swing trade time frame, but these concepts you have to be able to apply to smaller time frames in order to use the Trade Scanner Pro effectively. Long, yes, you should be looking for longs. As long as this structure stays intact, meaning we hold above that pin bar, right? We stay above that pin bar and you get some sort of buy signal inside of here somewhere, it's a possible long. And that is what I illustrated here. Okay, that's what this is. Now, do we break this higher high? Do we make the higher high? I'd at least give the market a chance to try. Okay, because if it's bullish, if it's generally strong on this time frame, there's a greater chance it can do that. Again, this is a probability game, and you want to lean on the side, of course, that has the greater probability. You want to stack probabilities in your favor. If the structure is bullish and that you get a higher low, at this point we can't make that judgment. But if we do, the higher high is likely to follow. Right? So the market's throwing its ball, and you're like, okay, based on that, based on probability, based on the structure, a higher high is likely on this time frame. So you define your risk from the reversal candle, and you're in. Okay. Now, that's assuming you're doing it manually. The Trade Scanner Pro takes a lot of that decision making off your table, off of the table, so you don't have to be all caught up in that. But I want to demonstrate actually, what goes, the thought process that goes into this, so that you're prepared. Again, a lot of people, the reason why this game is so hard, number one, is you're consuming tons of bad information because that's all we have access to. There is no good information out there. So more of it is not going to be better. You have to basically use information that people are overlooking, which is usually on the chart, right? You can find information on the chart that most people overlook. Just like when I talk about trend and levels, people just roll their eyes. Oh, yeah, I know about that. Yeah, they overlook it. They don't understand how to put it in. They don't understand how to put the puzzle pieces together. So that information carries some temporary value, as long as the market is agreeing with it, right? But if the market changes, you need to change. People get all caught up with news, and they get caught up with nonsense and other ideas that people throw at them. And in a situation like this, where you have this big vertical green candle, people are thinking, yeah, this thing is going to the moon. And then you get a conflicting signal. It takes out that low, and there's no more moon here. Okay, no more moon once it takes out that low. And if you don't know that, you sit in this thing like a mindless, ignorant retail trader. Sorry, I hope that's none of you here. And then you get stuck in this thing. Okay. And meanwhile, professionals and algos run circles around you all day long as they rob you. Because as retail traders, our purpose is to make others rich. Never forget that. Right? That'll help give you a lot more perspective in this game. Now, I just want to mention one thing. This rectangle I drew in this zone here. This is what I like to think of as the investing zone. That is the investing zone. Every time Bitcoin goes into that zone, so far, it reverses out of the zone. So if you're going to make a larger investment, like I talked about in my previous stream with the dollar cost averaging, that's the place to do it, okay, in that zone. That's the place to put on more. I'm not going to get into that now. But the thing is, if that zone is cleared and it breaks, and this thing breaks 49K, that's when we may have a more serious change on our hands. But until that point, this thing can be considered strong. And you say, well, how can that be? I know most of you know, but for those of you who don't know, this is how I make that determination. I simply look at the bigger picture, okay? And this bigger picture is not bearish, it's bullish. And this is a higher low consolidation that we have, in 49K is the bottom of it, and 73K is the top of it. Gold had a similar situation for a number of years and eventually broke out, right? this thing can do something similar. So don't be fooled by short-term movements. The general trend hasn't changed. Just understand where you are on the roadmap. Anything below 53K is what I would like to consider lower risk investing zone. And you can use this also to map out Ethereum, or if you're interested in some decent coin, it's probably going to be very similar, because if Bitcoin holds that low again, it's probably going to turn around again. If it breaks, and when I say break, I mean, we're at 45K. If we see something like that, then we have to adjust. Okay, because then that would be a change. That means the support's breaking. That's not what should happen if this thing is truly strong. Does that make sense? So we're always comparing arguments. If it's strong, it should do this. If it doesn't do this, then it must not be strong. Unless maybe it's some noise and maybe it turns around again and improves its strength again at some other point. But right now, it's not strong. So you're always looking for that argument. And the structure is where the argument comes from. This current structure that this thing's in right now, this little mini structure, it's a bullish structure, right? From this low to where it is now, it's a bullish structure with a little bit of a pullback inside there. That little pullback is equivalent to like a mini wave 4, right? And we have to assume that it's going to keep pulling back until it shows us otherwise. Maybe it's going to start showing us that tomorrow or something. We have a tiny little tail there. This candle hasn't closed yet. What is the next candle going to look like? I don't know. It's up to the market. But as I showed you from before, if we get an inside bar, green, or we get a pin bar, it tests lower and gives us a pin bar, that's the sign we're looking for the long on this time frame. All right, so are we clear on that? I spent a lot of time on this. All right, I want to move on to the Trade Scanner Pro here. Are we clear on this? So as the week unfolds, we're looking for that long signal, and we're looking for a test of the, working its way back up to that 64K area. If it doesn't happen and we just keep taking out the daily candle lows, it's possible we can get back into the 53s, 52s, 50s. It's possible. So just be open to both scenarios and let the market throw the ball. All right, now, let me know if you have questions about that. What I want to do next here is I want to talk about the Trade Scanner Pro. So if you're not familiar with the Trade Scanner Pro, let me explain to you how it works. First, before I do that, I'm going to change this chart over here. All right, we're going to change this to Bitcoin perp because I want to match the charts to the MEXC chart. It's a perpetual futures contract. You don't have to use that, but I like the charts to match. It's just easier. And plus, this is a clean chart. There's nothing on it. So let me explain how this works real quick. The Trade Scanner Pro is a formula. The formula that our Trade Scanner bot operates on. And it's a trend following momentum reversal system that I've developed over many years, right? Now, the system first identifies a trend, bullish or bearish. As you can see, it says here, trend is bullish, right? Or trend is bearish. It tells you. Inside of that trend, it looks for a pullback or a retracement. So in the case of a bullish trend, it looks for this pullback. Once it finds a pullback, it measures the momentum on that pullback. And once the criteria is met, it will then send out a confirmation for a trade idea in the form of order suggestions. So you usually have a stop loss, you usually have an entry price over here, right? Looks like this. And then you have a profit objective, which is typically 1.5 times the risk, right? So if this is your risk, the profit objective is typically 1.5 times of that. I say typically because you could change that if you want, right? That's what this 1.5 says over here. It says Trade Scanner Pro 1.5, and then it says 4 regular. That 1.5 is your reward risk ratio, and you can set that. But if you're new, don't mess with that. It's 1.5 to 1 reward risk, right? And it looks like this. Now, what separates the Trade Scanner Pro from the Trade Scanner bot is the Trade Scanner Pro can actually take counter trend signals. So this is where things can be tricky. And if you don't have experience, you're going to have a hard time with counter trend. Counter trend ignores the trend and it finds reversals like in an area like that. Now, the problem with this is most of the time, a counter trend trade is going to be a lower probability trade. So you want to take them at very specific times, most notably what? Reversals. So that 60K reversal area, that would be an area where counter trend may be appropriate. If your smaller time frame happened to be bullish going into the 60K, you turn your counter trend on, and then you'd look for counter trend signals. Why? Because 60K is typically a resistance. You should know this in advance. So like I said, when it comes to using something like the Trade Scanner Pro, you need to know in advance if you're going to look for a day trade or a swing trade, or if you're investing. You must know this in advance. I can't say that enough times. If you just get the Trade Scanner Pro and you just turn it on and you just jump in any signal that you see, you're taking random trades. Most likely, it's not going to work very well for you. And I don't want you to have that experience. So I want you to use the tool properly. A lot of these fake gurus, when they have like a tool that they're trying to push on you, they'll tell you when you say, oh, it's not working. They'll tell you, oh, it's you. You're doing something wrong. Are you investing your time properly? Are you have to be at this 24 hours a day in order to make money? Like they usually find some faults that, whatever, and they just string you along. I'm not doing that. I want you to understand that there's a proper way to use the tool. And if you use it properly, it doesn't guarantee you will win, because the market is random a lot of times. And it's very easy to be wrong, especially if our probability is 50%, right? That's why we manage risk. And that's why the Trade Scanner Pro defines risk so specifically, because that's really a big part of the game, defining the risk. And when you win more than what you risk. That's the 1.5 to 1 reward risk ratio. But the great thing about the Trade Scanner Pro is it has a trailing stop. And the trailing stop can keep you in trades longer. So that 1.5 to 1 may turn into 2 to 1. It may turn into 3 to 1. Right? And that's how you get ahead over time, right? Now, the bot has proven that it can do this, and the bot only sticks to the 1.5 to 1. And the bot is very limited. It doesn't take counter trend trades, right? So I want you to understand what the bot does and what the script does. The script is for people that are more hands-on. The bot is for people that are more hands-off. Like, you don't want to do all this analysis. You don't want to do that. You just want trades on the side of the trend. Okay, the bot will send them to you. And then you have to place the orders yourself and all that. At some point, the bot will take trades for you, but we're not there yet. If you supported Steen more, maybe he'd get there faster, okay? But we're not there yet. So people that are more hands-on, they want to do this themselves, you have the script. But there's a little work you have to do, right? And that's what I want to show you here. All right, so let me know if you have any questions. So that's how the Trade Scanner Pro works, right? Now, when you're working with the Trade Scanner Pro, like I said, you have to decide what time frame. Now, I'm going to work with the day trade time frame. I'm going in advance. Before I even look at a chart, I know this. So I'm not going to look at a chart first and then decide. I'm going to decide first. Okay, I'm going in as a day trade. I'm looking for day trades. Maybe it's swing trades for you, okay, which means that's going to determine what time frames you look at. But as a day trader, that's going to shape what time frames I'm interested in. So I'm going to work with 2 time frames. When you work with the Trade Scanner Pro, it's best to use 2 time frames. You have your action time frame, which is going to be your smaller one. That's the one where you're going to take trades on. And then you're going to have a larger time frame. The larger time frame is where you get your context, or basically source your trade idea. And you want your smaller time frame to synchronize with your larger time frame. That's the whole idea, especially when you're using counter trend mode. Now, so in this case, right, I want a day trade. I don't need to look at a daily chart. I can work with a 30-minute chart because I'm interested in intraday movements, right? So I switch this to 30-minute. That's my 30-minute chart, intraday. Now this one, I'm going to switch this to a 1-minute over here. This is my action chart. Oh, look, there's a trade on it, okay? But don't worry about the trade just yet. Let's turn that off so it doesn't take away from what I'm saying. We'll turn that off for now. Now, the first thing I'm doing here is I want to determine my trade idea. I have to source the trade idea. Now, what can you guys tell me about this chart? What can you guys tell me about this 30-minute chart? Anything? What can you tell me about this chart? Now, we saw the bigger picture. We know that there's some support in this area. That we know. Okay, we know that there's support in the area. And it looks like prices reacted off of that support. Okay, good to know. But what else do we know about this chart? What's the first thing that we really should determine? Bearish. There you go, Armin. The trend. It's clearly bearish. Lower highs, okay, pushed this low and pushed into this support. Okay, the momentum right now is bearish, even though we're at a support, okay? So if we know that the trend is bearish, what does that mean as far as support and resistance levels. What should we expect from support levels, and what should we expect from resistance levels? Who wants to answer that question? Okay, and I'll take this thing from Alex off here. I'll take that. We don't need that anymore. Thank you, Alex, for that. So while you guys are answering that question, I'm going to put in the link here. Make sure I do this right. So the question is, what can I expect? TSCPRO. What can we expect from support levels and resistance levels if the trend is bearish? And you could say, I don't know. But my experience, people, you guys should know, because I go over this a lot. What should I expect? Resistance, hold, support, breaks. Armin, good answer. That's the answer. Okay, good answer. Lad, support breaks. Yes. So it's reasonable. So even though we're at a support over here, it's within reason for us to expect that to break. Okay. And it's also within reason for us to expect this resistance, which was an old support here, to hold. Right. So I can draw some lines on that. Notice. And so far, that's what's happened. Okay. It looks like we have some sort of resistance in this area. Hold on. Let me draw a rectangle in this area. Remember, it's not going to be precise. I'm using horizontal lines, but it's not going to be precise. It may be like a little zone area like this. Okay. So that's a place to be looking for what? What should I be looking for if price gets in here? What should I be looking for? Should I be looking for continuations, or should I be looking for reversals? What do you think the answer is to that? Short. So would that be a continuation or a reversal? What would that be? Relative to what's happening right now. Reversal. Yes. Because right now, price is working its way higher. So I'd be looking for reversals up here. Right? Remember, this is a 30-minute chart I'm showing you guys. So the continuation would be now, because this momentum is bullish right now. And that's where I'd be looking for continuation up until the resistance. But now, so you guys are saying continuation because you're saying continuation of this bigger picture trend. But you see how it gets mixed up? This area is really an area for reversals to continue the trend, but it's a reversal because right now we're working our way higher. The continuation in that regard would be a break of this low. Then you'd be looking for a continuation pattern, like an inside bar and then break of the low of the inside bar situation, right? Like this inside bar, there's like an inside bar right here, for example. Took out that low, that would be your continuation. See? So it can be confusing. Yes, the continuation of the broader trend, but we're talking right now about this little momentum action right here. So we'd be looking for a reversal. All right, so you guys clear on that? That's why, it's very easy to get confused and for misinformation to spread. That's why it's so important to be specific, especially with stuff like this, right? So I've sourced some ideas here. We know that right now, this thing is trying to work its way higher. There's no resistance exactly in its face just yet, but it's kind of nearby. But this area can go either way right now where it's at. I can get reversals here. I can get continuations here. All right. The general trend we know is bearish. So I'm probably better off betting on the bearish side than on the bullish side. If I'm going to bet on the bullish side, I should be doing it at a support, if anything. But as we know from before, this support is likely to break. So if I'm going to be super aggressive, I can look for the failed low, a reversal there. But again, that's being super aggressive, right? So I don't want to confuse you with that. Okay, so that's our idea. We want to work on the bear side because the general structure is bearish. Now, but we're not exactly at a great level. So I'm going to try to work with this, and I'm going to look for, I guess you can say, continuation patterns in this situation, because I mean it's not exactly this is kind of a mixed area here. The reversal would be up here, right? So what is this over here then? It's confusing, right? Depends on how we look at it. So actually the continuation, if this momentum is what we're based on, because it's a 30-minute chart, the continuation would be the break of this high and the reversal would be the break of this low because it's reversing, it's changing its momentum. Okay, so that's for clarification. Let's now go to our 1 minute chart. Let's turn the Trade Scanner Pro on. And let's see what the Trade Scanner Pro is telling us. Okay. Right. So look at this here. The Trade Scanner Pro on the 1 minute chart is telling us that the trend is bullish. Okay. Because why? It's looking at this structure over here. But we just determined that the general trend is not bullish. So what do I do? Who wants to answer that question? But now we're starting to break these 1 minute supports. Look at this. How do I, oh, look, the trend just changed. Look at this. Just changed. Got to keep an eye on that, right? Trend changed to bearish. So look for resistance. Well, the thing is we can wait for resistance. That's one thing we can do. We can wait for this, which may take a while. But how can I get into something sooner? Remember, when you're on your action chart, now we're waiting for a signal because, like I said before, the Trade Scanner Pro is a confirmation tool. I want confirmation. I know what I'm looking for now. We've determined. I want to look for a short. I'm interested in a short, okay? And I explained why. So I sourced my idea from my larger time frame. So now that I'm on my smaller time frame, I want to get short, right? But am I just going to jump into this? There's no signal here. If I jump into this right now, I'm just randomly, I might as well be playing a slot machine, right? So what do? My trend on this time frame is bearish. What do? Lad says, okay, right. So before, see, so counter trend would have been correct if this was bullish. Do you guys understand that? Now, this chart is clean, right? There's nothing on this chart. Let me switch over to the settings panel. When you first get the Trade Scanner Pro, all of these settings are off. So you got to turn them on, right? Trailing stop. You want to turn on show previous trades, and you want to show heads up. We don't have to turn counter trend on. We just explained why, okay? Now, notice there was a long signal here. Was that worth anything? Let's see. No, that was a minus 84 points, this little long signal. How about the short? Was that worth anything? Let's see. No, that was minus 57 points, it looks like. Okay. That's a nice thing about having the historical numbers. You see like kind of what's going on. Also notice how long it's been taking, right? It's taken all this time for 2 trades to show up. Now, Steen says here, just finished programming that in the next version, of the bot. Okay, will be on the charts. Oh, cool. So what Steen is telling us there is the bot will now be able to show the signals on the chart, where before the bot only showed the chart. That's a big deal. Wow, that's really cool, Steen. Thanks. When we send out an email, you'll have the signal on the chart, where before it was just giving you a blank chart, just like I was showing you. This is really what your chart should look like, and we're waiting for the signal, right? So we've determined that we want the short. Now, the trend keeps changing here. You got to keep an eye on this because we're on this 1 minute chart. Things change a lot on 1 minutes. We know what we're looking for, right? So this trend is probably going to change back to bearish once the candle closes, because obviously there's a boundary over here somewhere, and it keeps changing, right? Now, one of the things with this situation, we know what we're looking for, but look how long it takes from trade to trade. 74 bars, that's over an hour on a 1 minute chart. That's 74 minutes, right? That's like an hour and 15 minutes. I'm not going to wait an hour and 15 minutes, right? Especially when I'm trying to demonstrate an example here. So what do? You guys who watch me every week, what do? Now, if you're new, I suggest not to do what I'm about to show you. If you're new, I suggest working on a 15-minute chart and using like a 4-hour or using a 1 hour to source your trade idea. But what I'm going to do here is going to be more advanced. I do it like this because I want to show you an example, and I want to show you the trade scanner in action so you see that it works. Well, you could do that, Andre. You can do that. That's one idea. Lad says you go to the 15-second. Right. You go to the lower time frames. So if you don't want to sit in front of a computer for an hour, and I don't blame you, you shouldn't want to, you shouldn't have to, you set a notification. When you have the premium version of TradingView, you could set multiple notifications. If you have the free version of TradingView, you can only set one notification. You don't need the premium version to use this, okay? But you just there are more benefits. Now, I go to a smaller time frame. That's the other thing I can do. Now, keep in mind, this is usually a very bad idea, especially if you're a beginner. And the reason why it's a bad idea is because this time frame is extremely noisy, a lot of noise. Now, if you notice these lines on the chart, those are heads up, okay? That means a signal is likely to come soon. Now, let's see, this is the 15-second. Let me check a 30-second here. 30-second. Oh, we just got a signal on the 15-second there. Oh, there's one on the 30-second, but those are bullish. Okay, that thing is calling longs. I'm interested in shorts. So I'm going to turn counter trend on, and this is the counter trend version, okay? Let's go back to the 15-second. You say, oh, but there were signals. Right, but I'm interested in shorts, though. I remember, I'm not taking the signal for the sake of taking a signal. I'm looking for a signal that aligns with our idea, that premise that we sourced, right? We agreed that we're going to be looking for shorts. So I'm not going to take a long, right? Now, I'm in counter trend mode. This thing says long. So that means it's looking for shorts. Do you see how that works? That may be confusing. You have to make sure. It just changed. Look, it just changed. It's going to change a lot, especially on the smaller time frames. So you got to change with it, right? I have to adjust. If this thing continues higher, like it's trying to do, okay, look, it's back to bullish. I'm in counter trend mode, so it's looking for shorts. Okay. Remember, you got to stick with your larger time frame. Now, here, we'll watch the larger time frame at the same time. So we see what's going on here. I mean, there's really not much going on here. There's some minor resistance in the area. Let's see what happens. Okay, I'm still interested in that short. Maybe we'll get it in the next few candles. And that's that. Now look at this. Was this trade good? Let's see. This thing made 83 points. This trade right here was worth 83 points. Interesting. On the long side, interesting. Okay. So we talked about why I'm looking for shorts. So you understand, I'm not just jumping into signals. If I turn the counter trend off, there's a signal there. All right, but I'm not interested. Don't change your premise. You got to stick to your premise. If you're wrong, if this thing rallies all the way up here, you'll have to adjust at some other point, right? But stick to your premise. Don't keep changing. If you do that, you're going to run into problems, right? So you stick to your premise. We know that up in here, we're looking for reversals, right? We're definitely looking for shorts up here. And if we get some sort of bearish signal here, we're going to try it. Why? Why are we so bearish? Because the general trend is bearish. And we're not at any support. Support is over here. So if we're going to bounce, I mean, I'm not shorting into the low, not up here. I'm not, okay? Not into the low of the day or whatever, which is all the way on the bottom here. If I was shorting like right into this level right here, that would be risky, right? Because I could potentially be shorting the low, but there may be a continuation pattern. Remember, the market has to do its thing. You take a trade, and then the market has to continue. If the market gives you a problem right away, then you're probably stuck on the wrong side. It happens all the time. So you just get out, and then you have to adjust. That happens. But that's especially frequent on really small time frames, like a 15-second chart, which, like I said, I don't recommend. Now, I just want to show you working examples. So look, you see all these columns showing up here? Those are heads up. Heads up means a signal is likely to appear in the next 3 to 5 candles, right? So let's see in the next couple of, there it is, one candle. So I'm going to short this. I'm going to short 2 lots. Okay. And let's see. Now, this is a very tight stop. On a 15-second chart, it can easily get stopped out. How much is this? Let's see. 42 points. That's nothing for Bitcoin. This is probably going to get blown out. Okay. Now, in previous week's examples, I've shown examples with these really tight stops, and it happened to work out really well. See, this one's going to get stopped out, but they don't always work out well. See, look, out. I'm not going to stick around in this thing. I'm going to buy them back. Get out. That was quick, right? I wasn't even in that trade a minute. It's very important to respect the stops, because look, I don't want to be stuck in this. Right? So it's still giving, remember, I'm in counter trend mode. So you should have been in trend mode. Well, I guess you could have made that argument, but we're going right into the resistance. I tried one here. We know that the general trend is bearish. I gave it a try. It wants to work its way higher. What am I going to do? All right, no problem. I'm still interested in the shorts. So I'll try another one. Let's see if it gives us another signal. It's likely to give us one around here somewhere. Let's see. What does this thing say? Well, this thing said it lost 61 points. Okay, you should have been out for a 61-point loss. If you shorted that and you're still in it, this is where you run into problems. This is where you get into trouble, because this thing could go nuts. And this thing, for whatever reason, right? Some news could come out. We don't know. Some news can come out, and next thing you know, this thing can do something like this, and you're like, "What is going on here?" It can happen, and you don't want to be stuck on the wrong side of that. Okay, so you respect the stops. So let's see if we get another signal. There's our warning. By the way, if you don't like all these columns on your chart, if you're like, that's too noisy, it's too much stuff on my chart, you could change the color in your settings panel, right? You go to settings right here, and you could actually change the color, right? And the heads up colors are in here. You could change that. All right, you could customize a lot of things on this script, which is really cool. So based on your experience level, you may not want certain things, you may want certain things, and you can turn things on and off. Now, again, another signal is likely to appear soon. I'm getting all this warning, okay? And we're near the resistance. So, all right, that's what I want to see. Now, I'm not going to notice, I'm not reacting. I'm not changing my idea. I'm like, I'm going to go long now. I mean, if I was going to do that, I should have done that earlier, okay? But now we're at the resistance. I really shouldn't be going long now. Now, here's a question. When should I change to long? When should I be thinking long? To answer that question, if we blow the resistance, if we do something like that, then I should possibly be thinking long on pullbacks. Okay? At that point, all right, there's our signal. All right, I can't even get to this thing fast enough. All right, shorted it again. Too busy talking here. All right, so I got this thing at a bad price. Okay, I mean, my entry should have been here. I got it at like the bottom of the candle. So let's see if this works now. Again, I shorted now the resistance. Okay, reacted pretty. Notice how quickly it reacted there. It reacted very quickly. Now, again, this may just be noise. Let's see what happens. Again, this is what happens when you're on a 15-second chart. This happens. By the way, while we're looking at well, let's see if it stops out. Now, sometimes what will happen is it'll get near the stop and it'll turn around and go back below the blue line. That can happen also. If that happens, I'll short more. I see that as a second entry, like another opportunity to enter. I'm showing you this very quickly on a 15-second chart, but imagine this happening on a 15-minute chart. You have plenty of time to do what I'm showing you here. Okay, you can get back in, you can enter more, this and that, if each candle was 15 minutes long. All right, let's see. What does it want to do? Is it going to stop out? It's up to you. Market throwing the ball at me. Also, 15-second candles look very dramatic. They look a lot more dramatic than they really are. So don't be like fooled by that. Now, while we're waiting for this thing to do something, oh, all right. Do I have to get out now? Let's see. I may have to, because I'm going to respect it. If the trade vanishes off the chart, that means I should be out. I'm going to start erasing some of these up here so that we can see what's going on here. Let me erase this. All right, so the chart is less confusing. So we know that there's a resistance up there. Oh, it wants to stop out. All right. Give it another second here. Oh, wow, look at that. Turns around again. That's why you let the thing answer the question. Don't answer the question for it. I'm either going to add more or I'm going to stop out of this thing. Let's see. So this is a good example for you to see when the market gives you trouble. If the market just goes my way, oh, it's so easy, right? And then you're going to sign up and you realize it's not that easy. Okay, I just shorted more because we touched the entry price a second time, right? Remember, what's giving me the confidence for this is the fact that we are at a resistance that we determined earlier. That's where the premise comes from. If that wasn't the case, I wouldn't be doing this like this, right? So that's like the basis behind the whole idea. The Trade Scanner Pro is just showing me where to get in and where to get out if I'm wrong. Great thing about this is it gives me a nice profit objective. So I don't get stuck. Like, a big problem, and I hear this from people too. They're in a trade, but they don't know where to take their profit. And they get stuck in it and they're like, oh, and then their mind plays games with them and they think that they're going to be in this home run trade. Meanwhile, the trade is only worth, a few points, right? Something that's relevant to the price action, like the profit objective of the Trade Scanner Pro. But they hold on to it forever thinking they got this big winner. I mean, what happens? It turns around on them and they get stuck in this big losing trade. Okay, so this tells you what's reasonable for this time frame. For 15 seconds, this is a reasonable profit objective for a 15-second time frame. If I change this to like a 1 minute, for example, it's going to give me a larger one, but there's no signal on the 1 minute. Notice? No signal on the 1 minute. So when I run it, find a signal, and the market's moving very slow like this, or it takes forever, I use a smaller time frame. But you can see smaller time frames can be very problematic. So there's nothing on my 1 minute. Now realize eventually a signal can appear on my 1 minute, right? Look at the warning on the 1 minute. We're off of the resistance. This is beautiful if a signal appears in the next couple of candles because I'm in and I've put on twice the size, right? If a signal appears here now on the 1 minute, I could use the 1 minute as my reference if I want. The stop is going to be wider. Also, the profit objective is going to be wider. Do you see how that works? Again, this is more advanced. Okay. Now, here's the thing. If I get a signal on my 1 minute, just for demonstration purposes, I'll add more. Okay, if the signal shows up on the 1 minute. Now look at the bad price I'd be getting. I'm in from a good price because I was working on a 15-second chart. Like I said, I don't recommend the 15-second chart, but you could do this, like, for example, using your 15-minute, but then using a 5-minute for your smaller, even smaller time frame, sort of like how I used the 15-second chart. The smaller the time frame, the smaller the stop, and the smaller the profit objective. Now, look, this is very noisy. I mean, one candle, we ate up that 1 minute candle like in 2 seconds. So what am I going to do? Let this thing decide for me, right? That's the whole point of the Trade Scanner Pro. It decides for me. I don't react to the candles. My decision-making process has been simplified. I don't have to, where should I get in? Where should I get out? What should I do? It's answered. The Trade Scanner Pro tells me. So let's go back to the 15-second. All right, and let's see. Oh, look, I have a trailing stop. It's active. See that? It's my trailing stop. What that's doing is it's reducing my risk. So my risk, which was originally this much, 45 points, okay, has been reduced. And each time the candle closes lower, look, my risk keeps getting smaller. What is this now? 30 points. So if the market gets stupid right now for whatever reason, and it can, the market can do that, right? I'm going to lose 30 points instead of 45. Which is better to lose? 30 points, right? I think we would all agree. And it can happen. Look, it's starting to happen. It can happen. So this is where the Trade Scanner Pro embraces the random nature of the market, as opposed to always getting caught up on the wrong side and not being confused. This thing is like, okay, look, either this thing is going to be bearish, right, and work its way to the objective, or it's going to stop me out. It's going to be one or the other, and I just respect the orders. I don't have to think. I don't have to pretend I know the future. I don't have to, use the RSI and all that other garbage to confuse me more. It's now up to the market, and the Trade Scanner Pro opens up the possibilities because the Trade Scanner Pro understands the random nature of the market, right? That's what it was built upon. So let's see. Let's see how this plays out. It always looks good when it's going my way. Whoa, it's amazing, right? And then it turns around. Oh, this thing sucks, right? Don't get fooled by that. you have to focus on the risk. Okay, my risk has been cut in half. That's what you should be impressed with, not the profit. The fact that my risk was cut in half. Because the thing is, if you're in some kind of tool that's cutting your risk in half, or even better, if this thing just goes my way a little bit more, eventually the trailing stop will go to break even. I don't think that's going to happen here. It looks like I'm going to get stopped out. But if I get stopped out, I have to respect it. Let me pull up my order book and let me prepare to blow out. I have 4 contracts on, so I'll put 4 in there. Let me just prepare to blow out. Okay. Now, again, if this market was going my way and continued going my way for a while, the trailing stop would eventually line up with the entry price, which would make my trade risk-free. I don't think the market's going to give me that luxury here. Let's see, but it might. See, it's random. It's random. I don't react. The thing is, you cannot react. Without the Trade Scanner Pro, I'm more likely to react. Oh, look, a bad candle. Here we go again. All I'm doing here is preparing to get out if it taps out. Let's see if it does. All right, tapped out. So I get out. I'm not going to take the chance. I blew it out, so I took half the loss instead of the full loss. I'm not going to take any chances. Like I said, this thing could get stupid. Now, the other thing is, this thing may give me another signal. It's giving me the warnings, and maybe it gives me another signal. All right, I'll try one more if it gives. Do I have the time? Yeah, I have some time. Let's see if it gives me the signal. Now, it's frustrating when it stops you out and then turns right around. There it is. All right, so I'm going to try it again. I got short again, but this time I shorted the 4 contracts because I had 4 contracts. All right. So I'm trying to keep the size consistent. Let's see if this one works. This is what happens on a 15-second chart. You shouldn't be dealing with this kind of stuff on a 15-minute. Like a 15-minute is a lot slower, obviously. Let's take a look at like another time frame. Let's look at a 30-second chart. Anything there? Let's see. What is this? This is a long sig. Is that a long? No, that's a short. Okay, so I got a 30-second short as well. See that? Look, the 30-second short was called here on the 30-second time frame. Okay, I'll work with the 30-second time frame. I can do that now. I'm in, and I got in back up here, so near the entry price anyway. Look at my trailing stop. All right. So the 15-second stopped me out prematurely. That's what happens when you use a 15-second. The 30-second isn't much better, but hey, I'll give it a try. Why not? I'm in. I might as well give it a try. It gives it a little bit more breathing room. By the way, one of the advanced settings on the Trade Scanner Pro is you could change the speed of the trailing stop. See that? It says regular, tight, and loose. See that? You can change that. So if you want your trailing stop to be more aggressive, meaning it's tighter, and it follows the trade in tighter so you keep more profit, you can do that. That's appropriate in certain situations. If you want it to be more open and you want the trailing stop to be like not so sensitive to give the trade room to breathe, you can do that as well. That's an advanced setting. If you're new, I would not recommend changing that. But if you're more advanced and you want to adjust that, you can. Say thank you to Stian for programming that. All right. By the way, if you have suggestions for Stian, he loves suggestions, and he loves updating the script with suggestions. Savi had a suggestion for, when you put up when you do this, see this? When you roll over a previous trade and it shows you the trade idea. Let me do that. See that? That was Savi's suggestion. This little pop-up over here was Savi's suggestion. He told Stian, and Stian implemented that like in one day. So tell me anywhere else where you have access to the developer who will implement your idea in one day. Tell me anywhere else you can do that. So anyway, that was a really cool suggestion by Savi. So you guys seeing how this works? Any questions? It's kind of cool, right? I mean, look, this trade's working. It tossed me around a little bit, but that's what happens on a 15-second. Why I don't recommend it. But our general premise was correct. Look, we're at the profit objective. The general idea, resistance off this level, was in line with the market, right? The market threw the ball. We were able to read it. Basically, you got tossed around and got hit with the ball a couple of times. And here we are, profit objective. So the premise was correct. Now, here's the thing. We're at the profit objective. What do? Should I get out? It's a good idea to take something off the table at the profit objective, right? So here's what I'm going to do. I have 4 contracts on, right? I'm going to take 2 off. We're going beyond it, but I'm not going to let greed get in the way. I'm buying 2 back. Oh, but you could make billions of dollars. I don't let greed get in the way. I know better. Now, I only covered 2, and I have this trailing stop that's going to start following the trade. So now, if this trade wants to do something ridiculous, meaning, random, and it wants to do something, whatever, like if it wants to go right to the low and test the low, remember the bigger picture trend is bearish, right? We determined that earlier. The trailing stop can keep me in this trade, and I can capture a lot more than I would otherwise. That is, if there's any magic to the Trade Scanner Pro, that's the magic. Because when you capture a trade that's 4 or 5 times what you were risking, 10 times. I mean, the trade I had the previous week went 20 times my risk because it was a tiny risk, right? I risked 40 points or something like that. Or I think it was 25 points. I forget what the risk was. And the trade ran 400 points. So it was a $400 trade. But the risk was like something like 25, 30 points. It was something like 20 to 1. But the reason why it was like that was because the risk was so tiny because it was on a 15-second chart, right? It's always a function of the risk. So, right now, look at my trailing stop now. Here, I'm going to erase this blue line because we know that that's resistance, right? That was what the idea was based on. Look at my trailing stop. Look, beautiful, right? This is way ahead of my entry price, isn't it? You see that? So this trade now, this trade should not lose. If the market reverses right now and goes to my trailing stop, I'm still ahead of my entry, right? So this is not only a risk-free trade, it's a profitable trade. No matter what, it should be a profitable trade. Maybe not the max profit, but it's a profitable trade. Also notice, I'm getting warnings, bullish warnings. Trend is bearish. I'm getting bullish warnings. So that can also be a heads up to perhaps maybe get out of something because, we shouldn't be seeing that. We should be seeing solid red candles, not orange ones, right? So that's something to keep in mind. You don't have to do something there, okay? At this point, it's up to you, right? I can let the trailing stop determine my exit, or I can just get out just because I feel like getting out. Look what's happening on my 30-minute. Beautiful pin bar. Beautiful, beautiful, beautiful. Right? Look at that. How much time do we have until that one closes? Oh, like 2 minutes. So we may get a 30-minute pin bar, which would be another sell signal, right? On the bigger picture. That would be nice. So my point is, look how much more profit I've captured. Let's see. At this point, my entry was here. Well, the entry on this time frame, it's 265 points, right? My original profit objective is 112 points, basically. So I made double that. So I'm still in with 2 contracts. My trailing stop is at my profit objective. Does the market want to keep paying me more? This is where it gets random, right? This is random. I don't have to think at all. Do you see? This is what gets me. I showed this beautiful example. Again, I can't make this up. This is the market. And people try it out for a day and they cancel. How could you cancel something like this? It does so much for you. I could not do this. I mean, I have the experience to do this on my own now. But when I was a beginner, I could never do something like this. I would have gotten out a long time ago. All right. But look, this keeps me in. I have no reason to get out. We may go straight to the support. We may go there. Again, I don't know, but I don't have to know. It's up to the market. The market does the thinking. I simply follow. Like I said before, the market throws the ball. We just have to read the ball. We're followers. The market is the leader. Like if you learn how to dance, right? The girl is the follower, the man is the leader. Hey, look, that's the way it is. Okay? That's the way partner dancing works. We're like the follower. The leader gives us an instruction or a signal, and we simply follow it. The market is the leader. So let's see what the market wants to do here. I have a couple, I have basically two choices right now. I let it go to the trailing stop, or I let it ride. Those are my two choices. Right? I'm actually, yeah, I could let it ride. That's a choice. I should say I can get out right now if I want to. Look where we are. Support, below that support. So I can exit anytime that I feel like, how much money am I up? Oh, I'm up like $500. Great, take it. Right? You could do that. Pick a random price and get out, or you can let the trade run. Now, theoretically, you should let your winner run, because you're capitalizing on the random nature of the market. While everyone else is sitting there trying to forecast this and forecast that and all that other nonsense, like I explained earlier, all you have to do is come up with your premise at your level, wait for confirmation, let the Trade Scanner Pro handle the rest. All you have to do is respect the orders. Here we are. Okay, I'm going to respect it. If it wants to go there, well, in fact, I have two contracts, so I might as well get out of one, and then I'll ride one. How about that? Yeah, I'm up like $583 on these two. I'm going to get out of one, just to show the market some respect. Get out of one, and now the trailing stop determines the outcome, the complete outcome of the trade. So I'll let this thing go to the trailing stop, and then we'll call it a day. All right, and it may not want to go there. Now notice I reacted here, and that may have been premature, but I wanted to take something off the table. Okay, I had a nice profit. Look how much beyond the profit objective it has gone. How much is that right now? Let's see. This thing has gone 233 points beyond the profit objective. That's what I mean. This is how you make money. You let the winner ride. Just let it ride. It wants to make more? Keep going. Okay, keep going, as Seinfeld would say. Let it ride. Trailing stop, still not touched. All right. Let it ride. So I have one left. We'll let it ride. Do you guys see this? So, by the way, as we're watching this thing go, some of you may be wondering, how do I sign up for this thing? Well, there's a link in the description. I also put the link here in the channel. Well, I had it here. Where is it? Let me put the link back up here. I typed it in. Where'd the link go? I must have turned it off. Here it is. Here's the link. You can go to that link. Okay. Oh man, this thing's getting hammered. Good thing I'm short. Now, you may say, oh, you shouldn't have got out of that one. No, I should have gotten out of it. Again, that's the whole thing. That's what gives me the luxury of doing this, right? You get out of something, you lock it in, and then now you can just relax and look at other stuff, right? So that link takes you to this page. It's a Trade Scanner Pro page, right? My website. And it tells you about how the script works, tells you about me, and then it takes you over here, all right? You can sign up for 14 days for free. If you cancel before the 14 days, and you have every right to do, it's very easy to do, then you don't get billed. If you wait till after 14 days, you will get billed. It's $22.50 a month if you pay a year in advance. That's $270, okay? Or you could pay $30 monthly. That $30 monthly fee is going up. So if you want to get it at $30, I suggest you do it now. I say it every week, but once Stian has the overlays, I'm raising the price probably to like $45 or something like that. I don't know the price yet, but it's definitely going to be more than 30. All right, once we have the overlays. Just letting you know. I don't want to hear any complaints. Oh, can I get it for 30? No. You have 6 months to get this thing at $30. Okay. So you click subscribe, right? And it takes you to this sign up page right here. Make sure on the sign up page that you fill out this field. That's the most important field besides your other information. That's your TradingView username. Make sure you put that properly, because if you don't, we won't be able to send you an invite, okay? The invite, by the way, takes about 30 minutes to 1 hour to receive. So it doesn't come instantly. It takes about 30 minutes to an hour. So within an hour, you should have your invite. Within 1 hour. I'll say that again. Within 1 hour. So if you don't get it like in 2 minutes, don't send me 10 million emails. Oh, where's my invite? Some people actually do that. Okay. give it an hour. If it takes longer than an hour, then please feel free to send me 10 million emails. But usually you get it within an hour, and then you just put it on your chart. Okay, so that's how you get the Trade Scanner Pro. And listen, you try it for at least a week or a week and a half. Don't cancel it like in a day. If that's what you do, then you're doing something wrong. Like clearly you're misusing it. You're just most likely taking signals for the sake of taking signals, and you're skipping over that whole lesson I just went over with you on coming up with a trade idea. Right? Source your trade idea first on the bigger picture. We had done that here. We knew where the resistance was. We waited for it. I got tossed around a little bit on the way to the resistance. We touched the resistance, and look where we are now. So this is a probability game. There was a greater chance that this thing was going to reject the resistance. Why? We said before, resistances hold, supports break. Well, the resistance held, and we're near the support. Theoretically, this support should break. Although it's trying to hold again, as you can see, it's trying. But at this point, look, I have the luxury of just sitting here and waiting. The market can tap me out here. I'm way beyond my profit objective. So what do I care if I give a little back? Or the market may just continue lower. And all these longs that are caught in this thing start banging it over here on this low. All right. So it's nice when the market gives you that flexibility. Okay, look at that. So that was the trade. And again, I can't make this up. This is the market. Let's measure this again. So if I get stopped out right now at that profit, at the trailing stop, that's 290 points. Okay, 290 points if they tap me out now. Not bad. And remember, I locked in somewhere, like over here somewhere. I locked that one over here. And I also got rid of the other two at the profit objective. Remember that? And you maybe think, oh, you should have stayed in the whole thing. I mean, you would be rich right now. No, you don't do that. Take the money when you can, and then you hold on to a little bit. And then when you catch a big move like this, it's like that's really what compensates you for all those small losing trades. Don't try to hold the whole thing. I mean, you can if you want to. That's your choice. But it's usually a good idea to lock in profits because, you see this move right now and you think all the moves are going to be like this, and they're not. There's going to be many instances where it goes to the profit objective and then turns right around and goes to the stop. And in those there's no way to know when it's going to do what. So that's why when it gets to a profit objective, you're better off taking something off the table. It's just a good habit to be in. Okay? Never hurts taking profits. And then when you get in this situation, you just let it ride. You just let it ride. It's easy. There's no thinking. Either I'm going to get tapped out or it's going to make a lower low. I'm not trying to guess what it's going to do. I'm not trying to forecast what it's going to do. We know where we are on the roadmap. We know what it's likely to do. So I'm willing to give it a chance because I'm on the correct side of the bigger picture trend. Now, remember how many times this trend was bullish? Do you remember? I kept switching back to bullish. And I'm like, don't be confused by that. If we had switched to long, we'd be in trouble, wouldn't we? Right? I said, don't switch. Why? Because the bigger picture is bearish. We want to synchronize with the bigger picture. Remember, the bigger picture is where the idea comes from. And then we're trying to synchronize the smaller picture with it. Remember that? So don't lose sight of that. If you sign up for the Trade Scanner Pro, please review this stream. Go back to the previous week's stream. Go back to the one before that. Watch these streams because this is where I teach these concepts. And this is where the best way you're going to learn how to use this thing. Because you're not going to learn how to use it intuitively. Right? Everyone thinks, oh, I'll just figure it out. I'm a pretty smart guy. I'm good with math and stuff. Right? Don't be that guy because the market is not intuitive. As much as you want it to be, as much as all the fake gurus tell you it is, it's not. It's an irrational and random game. That's the way it is. People are trying to rationalize things and they're trying to find precision and accuracy, and there's no such thing. It's a random game most of the time. So it's not intuitive. A tool like this simplifies your process, but understand that there are some steps to use the tool effectively, and each week I demonstrate it. As you can see here. All right, I'm getting tired of waiting here. I may just blow this thing out. Okay, but theoretically, I should be waiting for it to touch the trailing stop. Maybe it'll get there now. But Bitcoin was very nice to me today. It was very generous. You know, it followed along. It chose to agree with me. Okay, but in the beginning, as you saw, it wasn't exactly agreeing with me, and I was on the right side. I was shorting it. Okay, I wasn't buying it. All right, I'm going to get out of this thing very soon now with my one contract. So even with this one contract, I'm up like $300. By the way, this is on paper. To clarify, if people are wondering, "Oh, real money?" No, I'm not going to trade real money at 4 o'clock in the afternoon. All right, so I do this on paper, and you should too. In the beginning, you should do this on paper to get used to how this works and get used to the stuff that you have to do to synchronize with the bigger picture. It's not that hard. Oh, look at this nice move. It's not that hard, as you can see. The stuff that I'm teaching you here is the easy part to learn. The Trade Scanner Pro is the hard part. The stuff, the mechanics that go into that, the things that go into that to make it do what it does, that takes decades to learn. Okay, the confirmation part, trailing the stop, knowing when to get in, knowing where to get out, the random nature of the market, that takes a long time. The Trade Scanner Pro cuts that learning curve, so you don't have to learn it. You just have to come up with a premise. That's easy to do. Look, countless TikTok heads do it all day long, right? The premise, you could say, is sort of random, but we based it on some basic ideas: resistance holds, bearish trend. Two things: trend, levels. I repeat it every week. Okay, and you can see the result here. Very nice. All right, and look, notice how like I change my reactions. Right, I haven't pressed any buttons, but I get like a candle like this. Oh, I better get out now. And then look, red candle. Oh, I'll stay in. Right. If this order suggestion wasn't here, if that was not there, I would have been out of this a long time ago. Because I'm like, oh, I got to take my money. Got to take the money. See, like again, look, it's giving me a hard time again. This type of candle is what can get you to react in what seems to be a logical way, but the trade scanner says, look, give it until this point. Okay, and as long as I do that, I'm on the side of the probability of the bigger picture, and at this point, it might break the support because that's what probability favors. But there is noise, and it might touch the trailing stop instead. It's not up to me. Excuse me. It's up to the market. The market decides, and then I just adjust. See how it turns red again. All right, whatever. So you guys get the point, right? Any questions? Any questions? So go to the Trade Scanner Pro page, sign up for it, try it out for 14 days, and really try to give it 14 days, not 2 days and then cancel it, because it's a very valuable tool. I shouldn't have to sit here and I'm not trying to convince you to do this, but I don't know how much easier we can make this. Actually, I do know. Steen is working on 2 overlays, and the whole idea of the overlay is to make this easier. One overlay is going to be support and resistance levels. So it will show the levels for you. They may not be super accurate like you'd want, but there would be a nice general idea, right? So it's a great starting point. And then the other overlay is going to be where you can plug in markets that you're interested in, I don't know, a couple of stocks, a couple of coins, Forex pairs, whatever you put. And then you can plug in time frames that you want to watch, and it'll show you like a grid, like a table with all the stuff that's happening on all the time frames. So you don't have to jump from chart to chart. You could see it across like a table, right? So that's another overlay. And that's great to see, especially when you want to set up notifications and stuff and you don't want to sit in front of your computer. The example I'm showing you here obviously requires you to sit in front of your computer. But the Trade Scanner Pro is meant also for people that don't have time to sit in front of their computer, and that's why you could set notifications, right? It's very simple. You go here to notifications, right? Where's notifications? This right here, okay? And then TradingView gives this pop-up, and you simply click the Trade Scanner Pro, and then you tell it how you want to receive the notification. It's super simple. And then you just go about your business, and you let this thing notify you when something is happening. It could be a heads up. It could be a trade signal. It could be a trade exit. Okay. And you could track it on your phone, on your tablet, whatever. It's very convenient. All right. So this thing is just wasting time now. All right, so you get the idea. I don't think I have to wait for this thing to touch a trailing stop. I'm just going to get out. All right, the trade is green. Although I'd like to see where this red candle goes. All right, wants to get me in the long pin bar. What do we get? Let's see. See what the market wants to deliver here. Now you notice the market stopped moving, right? See how these candles are very small? Notice the trailing stop also stopped, right? Notice that? So it's not like it's going to keep moving and moving and moving. It stops with it's moving with the market, which is also very cool. A lot of trailing stops typically will just keep moving, and eventually you just get knocked out for no reason, right? Where this thing is waiting, so it's still giving you a chance, right? There's still a chance this trade may tap through that, may push through that support, which would be a huge trade, by the way, if it does something like that. I mean, at its max, let's see, its max profit is what? 404 points if I got out at the bottom. Now, again, there's no way I'm going to know to get out at the bottom because it's random. That's why you want to just get out at random points, right? Like if I was going to get out of 1 or 2, when it looks like an extreme low, whatever, that's why it's just a good idea to get out, just to get out. Because you don't know if that's going to be the bottom or not. But typically a bottom is usually, it looks very extreme, very like big candle kind of situation, right? Because that's where people are they're getting banged out and they're getting short. That's typically what's happening, right? And then they get caught. They're reacting. Sound familiar? So look, my trailing stop moved a bit again. If this thing breaks that support, this thing may sell off another couple hundred points possibly. So if you were in this, that's what you should be waiting for. Make sense? Okay, so, and this is what? This is a 30-second chart. 30-second chart. Here's my 1-minute chart. My 1-minute chart has a, now here's a good thing. Don't be confused by this. The 1-minute chart has a long, okay? Because why? Because we're in counter trend mode, all right? We're in counter trend mode, and the trend is bearish on the 1 minute, so you want to turn that counter trend mode off. So don't be confused. That's why it's a good idea to just stay on your time frame. Okay, so I'll go back to the 30-second. I'll turn the counter trend back on, right? So we can see that trade. Don't be confused by that. It's possible to have a long and short trade just on, right on top of each other. Stick to the one that you are in. Don't be confused by the other one. Just turn it off. Right? Or turn off, or just don't go on that time frame because it's going to confuse you. Stick to the one you're in until it's closed. It's that simple. Okay, is that hard? Is that a hard instruction to follow? I hope not. All right, I know I'm talking too much. What time is it? Oh, yeah, I talk way too much. But the trade doesn't want to let me out. Because I know what's going to happen. I'm going to turn this thing off. Okay, and this thing's going to pull back like 500 points. That's what's going to happen. As you can see, we have another little resistance is like developed here, a minor one. This thing's probably going to break lower. If I'm in a winning trade, I like to show it. All right, I'm joking. I'm not going to do this. I don't see any questions. You guys have any questions? All right, so let's prepare to blow this out. For the next candle, the next green candle, I'm going to blow it out. How about that? Next green candle, I'm out. I'm just saying that because I need a reason to get out. I hate to get out on a red candle when I'm short. So you guys understand what took place here, right? You understand how I was able to align with this? Look at this. You understand how I'm not reacting to the candles and what's keeping me in this? Do you understand how this thing basically simplifies your thought process? Now, many of you have the TradeScanner Pro. So again, this is a free training session for you, and you should get better at it each week as I show this to you. No green candle, only a warning. But if you're new, you've never seen this before, and you're like, oh, that looks really cool. Again, make sure you go back and review these videos Watch the student meeting that I conducted so you have a strong grasp as to how this works so that you don't sit there and take random trades. Because again, on that 1 minute, that would have been confusing. And if you don't know any better, you'd be like, oh, I'm going to get long now. And then you're going to have a losing trade on your hands. Because look, this thing just keeps going lower. This is not a long. Right? And why should we not be going long? We're near a support. We're not going long because the general trend is bearish, as we've determined earlier. If the general trend was bullish, that would be another story. All right, green candle, I'm getting out. All right, nice. So I was in this trade, man, look at this. You see where I got out, right? I got out here. 376 points. And what was my risk? Well, this is the 30-second. Remember, I took this trade on the 15-second chart. I mean, we could look at this in terms of the 30-second risk. Let's see. Remember, each time frame has its own risk. 73 points. 73 points of risk on this time frame. Okay, and I made 300 and whatever, 70 points. Okay, now if I go to the 15-second chart, which is where the trade originated, remember? This trade was taken out much earlier. The trade was, where was that trade? This is another trade. It's calling longs now because we're in counter trend mode. This was the trade here. So this, look, now look at this. The trade scanner reports this as a 73-point profit. See that? On the 15-second chart, it reports it as a 73-point profit. I made way more than that because I switched to the 30-second time frame after I was in the trade. Again, that's something advanced. That trade is still open, and I was able to ride that entire move. I could not do this without the Trade Scanner Pro. And the trade is still open. I just got out because I can't talk anymore. Okay? So if you don't see the value of that, I can't help you. All right, people. So I don't see any questions. I'm going to turn this off. It was a great example, another great example to show people how this thing works. You see the link here on the screen. Okay? You see the link. And I do this every week. So you come here, get your free lesson, ask questions. If you're confused about something, let me know. If you have a suggestion for the Trade Scanner Pro, let Stian know. Okay, or let me know. Put it in the chat here. He loves suggestions and he implements them pretty quickly. Look, this thing's going lower. See? After I get out. Anyway, this is a very valuable tool. And my hope is that you can improve your performance by using something like this and learning how to basically align your thought process with the intent of the market. Because as a day trader, that is what we do. Nothing else. It's a very minimalist pursuit. You want to make decisions with the least amount of information possible. I hope I was able to demonstrate that here adequately. If you have any questions, you know where to find me. You can send me an email, mark@markpmarkets.com. You can also send me a message on TradingView if you'd like. Discord community, it's been hard for me to get back in there, so it's hard for me to answer those right now. But there's Alex and there's Stian in there. They can help you and stuff like that. Also, if you get a message from one of us first, okay, me or Alex or Stian, if one of us send you a message and we send you to a strange website that's not Market Signals Pro, or we ask you for money outright, it's not us. So please don't get scammed. These scams are very common. Report that person, block that person, let everyone know that someone's trying to scam you, because I don't want my followers to be scammed. I have a good reputation, and so do the people that work with me, and we would not ask you for money. So there are a lot of people with nothing else better to do who try to take advantage of that. So please don't be ignorant. Don't be fooled. All right? Just wanted to put that out there. I say that on every stream. Okay, you guys. So I hope you get some value from this stream. If you have, please press the like button. Please press the subscribe button. That always helps out. And that'll be that. All right. So, yeah, I don't think I have any questions. I'm just looking at the chat. All right, people. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much